So what's your second question for us?
Okay, second question is, it's also a follow-up. You guys have said a few times that asset location is more important than asset allocation. And I'm just, if there's any way...
As important.
Or as important. So could you just, I don't know if you can generically describe that, or if you need to hear where everything is or how I have it invested, but I just don't understand my tax implications, I guess, of what I'm doing. Let me start off. My Roth IRA is set up to be all equities. And
perfect.
And the reason I did that was because of the growth, and I don't plan on spending that unless my new wife decides to travel around the world 3 times instead of just once.
Okay.
But I do have again bonds in my IRAs, and I don't know if that's the standard IRAs and so forth. So that's my question.
So from a high level, anything that is withdrawn from an IRA, distributed from an IRA or 401k, not a Roth but traditional, is taxed as ordinary income,
either while you're living or at your death.
Yeah, taxed as ordinary income. So
the recipient of that.
So let's say you owned a S&P 500 index fund. Then any sort of dividends that they spin off, essentially because it's in the IRA, it's going to be taxed as ordinary income. And if you own some fixed income, you own Treasuries, some other bonds, the interest on those are going to be taxed as ordinary income. Now, if things are held outside of an IRA, let's say in a brokerage account or just held in a direct treasury or something, those qualified dividends from your S&P 500 fund are going to be taxed at a favorable rate because they're called qualified dividends. They get a special tax. It's typically 15%. Could be a little higher if higher income with Obamacare tax. But
and why are they qualified, Scott?
Because that's the way they made the rules.
Because corporation paid taxes on them once already.
Okay, well, that was the argument at the time when they put that into. That's the rules that Congress created for us that we live by. So it's qualified dividends are favorably taxed when they're outside the IRA, and then something like Treasuries are not state tax. So if you live in a high tax state, they're exempt from state income taxes. And maybe if you own municipal bonds, for example, you can own municipal bonds. They're completely tax-free. So everything being equal, which is not the case, but all things equal, you would want to have your fixed income inside of a retirement account and your growth equities outside of a retirement account. That's if everything, but everything's not equal. We have our own income needs. We've got a lot of other issues that we deal with.
The second thing is if you've got things that have capital appreciation inside of an IRA, you're going to pay taxes on them at some point in time. But because of the current tax law, the step up in basis, you pay no tax on that.
So if you buy a stock inside of for $10 and it's worth $50 when you die, if it's inside a retirement account, that $50 is all taxable. Your heirs can spread it out over 10 years, but it's all taxable. But if it's held outside, guess what? All that gain is tax-free. So step-up basis.
So sometimes you'll actually see people come in, which will have the stock in their IRA and municipal bonds in a brokerage account, which they're accepting a lower rate of return for tax benefit in it. And it depends on how they're spending the income. If they're not taking any income out of the brokerage, it's completely backwards. You would put your regular bonds inside of an IRA and put all your capital appreciation in a brokerage account.
Because the argument would be you're opting for a lower rate of return on these tax and municipal bonds when it's not necessary because you've got this ticking time bomb of tax from your retirement account.
Yes. And then the second step behind that is you take a look at who's going to receive the money at your death. And so maybe if
there's required minimum distributions and.
Yes.
So
but if the beneficiary is in a much lower tax bracket, then I could make an argument why it should stay in the IRA. But I had a client, and I'm like, okay, tell me about your 4 children that are going to receive this. 3 of them made the same amount of money as dad and mom. So I said, how about the 4th one? It doesn't make as much. I said, this will be good for 3 out of your 4 children. So that's how asset location works. But it sounds like you're on top of it.
At least you're paying attention to it here. So
your fixed income is in your IRAs, correct?
Correct. My bond fund is just in my regular IRA. Yes, thank you.
Yeah.
I don't know if I lucked into this. I just knew what I wanted was Roth to be total equity, and so
I
figured
agree.
I'd just put the bond. And I do have a small brokerage account, but that's minuscule compared to my IRA and Roth IRA. But I do have something in there, and so again, I'm not very good at tax loss harvesting, but I do have some individual stocks in there that I'm looking at that too. So
well, you should absolutely.
Yeah. Well, glad you called, Glenn. And it sounds like you're doing well, and wish you
appreciate the call.
Yeah. And again, don't let the perfection of the estate plan get in the way of just getting something drafted.
Perfection get in the way of progress.
Yeah.